So, you're ready to become an entrepreneur. You have an idea or a product in mind, maybe even a business plan or a website, and you're ready to make things official and actually register your business. But should you create an LLC, a corporation, an S-corp, whatever that is? Today, I want to talk about the different types of business structures and which ones would be best for your new small business or startup. But before I can start making recommendations, I think we need a basic primer on the different types of business structures, how they work, and how they're taxed. Now, I'm not a lawyer or an accountant, and this is not legal, tax, or financial advice. This is just information from a fellow entrepreneur with over 20 years of experience. Alright, let's get into it. In this video, we're going to cover the most popular business structures: sole proprietorship, general partnership, limited liability company, an S corporation, and a C corporation. You've probably heard of a sole proprietor or sole proprietorship. That's the most basic kind of business entity. That's you right now. There's nothing you need to do to be a sole proprietorship. You already are one. If you drive for Uber or build somebody a website or a farmhouse table on the weekends, you have to report that income to the IRS as self-employment income. Sole proprietorship revenue and expenses are reported on a Schedule C or CEZ, and the net profit flows through to your personal 1040 as self-employment income. I know that sounds kind of complicated, but it's really pretty easy. Even free tax software like freetaxusa.com can handle it. Okay, quick aside, although you don't have to do anything to register a sole proprietorship with the IRS, you may want to obtain a free EIN or tax ID number so you don't have to give out your Social Security number to vendors or clients. See a link in the description below to register an EIN online. You may also have to register a DBA, or doing business as, or obtain a business license from your local city or county. Check with your city or county licensing and permitting office to be sure. A general partnership is very similar to a sole proprietorship, but with more than one owner. You have to register as a general partnership, file a partnership agreement, and do most of the work that you would have to do with a multi-member LLC, but you don't get any of the liability protection. I've owned a general partnership before, and I do not recommend it. For very little extra effort and cost, you can form an LLC. Partnerships file a tax return to report business revenue and expenses, but like a sole proprietorship, the net profits flow through to your personal tax return using a Schedule K-1. An LLC, or a limited liability company, is a separate legal entity that you establish through your state's Secretary of State office, or even a different state if you prefer. But a single-member LLC works very similarly to a sole proprietorship as far as the taxes go. You still file a Schedule C, and all the profits flow right through to your personal tax return as self-employment income. And a multi-member LLC is taxed very similar to a general partnership. There's usually a minimal annual registration fee, and some states like California charge some additional taxes for LLCs. So what's the benefit of having an LLC over a sole proprietorship or a general partnership? Since they're effectively taxed the same, there are no tax benefits to having an LLC over a sole proprietorship or a partnership, and it may even cost a little more. The main reason people form LLCs is to avoid personal liability for the debts that the business incurs. But as a brand new limited liability company with no credit history and no revenues, an LLC wouldn't be able to take on any debt. To get a credit card or a line of credit with a vendor or a bank, you would most certainly be required to sign a personal guarantee of the debt. We still have some credit cards that report to my personal credit even 20 years later. But an LLC protects you if you get sued, right? Well, to an extent. Having an LLC will protect some of the owners from personal liability for wrongdoing committed by the co-owners or employees of an LLC during the course of business. If an LLC is found liable for the negligence or wrongdoing of an owner or an employee, the company's money or property can be taken to satisfy that judgment. But the LLC's other owners would not be personally liable for that debt. The owner or employee that committed the act might also be personally liable for his or her actions, but a co-owner of the LLC who was not involved in the act or wrongdoing would not be. And whether or not you have an LLC, you should absolutely get business liability insurance, which is a topic for another video altogether. Bottom line, an LLC doesn't provide much more protection than just having a sole proprietorship or a partnership, unless you have business partners or employees. That said, there are some good reasons to form an LLC early on, especially if you're in a state where it's very affordable to do so. In my state, it only costs $100 to register a new LLC and $50 a year to renew it, and it can all be done online. Having an LLC makes it easier in the future should you decide you want your company taxed as an S-corp. It also, admittedly, just looks a little more professional than doing business under your personal name or a DBA. The downsides of an LLC business structure are that you can only have a maximum of 100 members, owners, or investors. So it isn't used very often for startups that are planning to raise venture capital or eventually go public. You've probably heard of an S-corporation. They get recommended a lot online. An S-corporation is not actually a business entity in itself, but rather an election with the IRS on how you would like to be taxed. You can elect to have your LLC taxed as an S-corporation, which gives you certain benefits, but also requires additional reporting and overhead, which costs money. Basically, if you elect to be taxed as an S-corporation, you have to put yourself on W-2 payroll as an employee of your business and pay yourself a reasonable salary, taking out all federal and state income taxes and Medicare and Social Security taxes and filing them with the IRS and your state. You'll have to run regular payroll whether you have any other employees or not, or pay a payroll provider like Gusto to do it for you. The benefit is that any net profits above the reasonable salary would not be subjected to self-employment taxes, which could save you close to 15% of the net profits above your salary. The revenue and expenses of an S-corporation are reported through an 1120-S, and the net profits flow through to your personal tax return just like with a regular LLC. A C-corporation is the most complicated of the business structures and one that most small businesses would never need to have. A C-corporation is a completely separate entity and has to file and pay taxes, and the taxes do not pass through to the owner's personal tax returns. Because of this, you often hear about double taxation with C-corporations. There are some advantages with C-corporations, but they usually only come into play in much larger companies. The additional filing requirements, taxes, and complexity of managing a C-corporation usually don't make sense for smaller businesses to get any benefit. The exception is if you know you're going to be seeking venture capital or other investments in your company, or if you plan to eventually go public. Obviously, very few small businesses will raise venture capital or go public, but if you know that's the path you're going to go down, then you should consider incorporating as a C-corp. A C-corporation lets you manage multiple classes of stock, like common and preferred. It's necessary if you plan on raising multiple funding rounds or offering stock options to your employees. So which business structure is best for your small business? Well, it depends. Personally, I've owned sole proprietorships, general partnerships, single and multi-member LLCs, and a multi-member LLC taxed as an S-corporation. And I currently have an active single-member LLC, a sole proprietorship, and an LLC taxed as an S-corporation. If you plan to take on any business partners, I definitely recommend going ahead and forming an LLC. If you plan on hiring employees, especially if they will be making deliveries or working in customers' homes, or any other activity that could increase liability, I would recommend going ahead with an LLC. If you're just doing some consulting from your spare bedroom or building a farmhouse table to sell on Facebook, a sole proprietorship would most likely be just fine. Now, I do not recommend new LLCs take the S-corp election in their first year. The added complexity and cost of running payroll and the additional costs in preparing the taxes for an S-corporation just doesn't make sense financially until you're making over a certain threshold of profits. And if you do hit that number in your first year in business, you can often still file the S-corp election late and have it granted status for that year. Also, if you elect to be treated as an S-corp and change your mind later and revoke the election, you have to wait a whole 5 years before you can make the election again. So in my opinion, it's better to wait and make the election when you hit the profit threshold that makes sense for your business. There's a great book by a CPA firm that goes into a lot more detail than I could on a video about the differences between LLCs and S-corporations, and it has a ton of information. I highly recommend The Taxpayer's Comprehensive Guide to LLCs and S-corps by Watson CPA Group. check the description below for a link. It's worth its weight in gold. So now hopefully you have a better idea of the different types of business structures and which ones might be best for your new small business. If you have any questions, put them in the comments down below. And if you like this video, hit the like button, subscribe, and hit the bell icon to be notified of new videos. See you next time.